Julia Lee standing by for you at Bell Direct to wrap the market action. And really we've seen a shift, have we not, Julia, in sector preference amongst investors today?
Carson, it does look like investors and traders are positioning them for a little bit more of a downturn and a pullback. We've seen a shift from those growth assets back into those defensive assets. In fact, if we have a look at the worst performing sectors today, they were the financial, the industrial and the energy sectors. So all areas which carry a high amount of risk. In fact, the financial sector was the worst performing, and that was led by the fall that we've seen in the banks. Now, the banks have had a pretty good week of late, and that's because of the ANZ's update and the view that bad debts and the cycle there had bottomed out. But today we did see a shift away from that banking sector. ANZ with the biggest losses out of the big four, down by 3.7%. The miners as well, another big part of our market, were sold off. We saw base metals tumblings on the London's Metals Exchange, and oil prices were down by about 2.5% overnight. So we did see the energy sector being impacted quite hard. On the flip side though, we did see the defensive areas gaining traction today. In fact, we actually saw the healthcare sector and the stable sector managing to finish in the black. So it does look like investors are taking risk back out of their portfolios. A bit more nervousness on the markets today.
And what was perverse, as you well know, is that for so many days we've been saying economic news has to move in lockstep with company reports. We got the slew of good numbers overnight. Market couldn't have cared less. Put options were thrown on financials. VIX shot up, volatility aplenty, and volumes were there to justify that as well.
It does look like the markets are really ignoring a lot of the economic data coming through at the moment. So it does look like the markets are a little bit nervous. We've seen a pretty good run up so far. In fact, if I bring up a chart of the Australian share market this year, this is in 2009, and this is what the graph looks like. In fact, since the 9th of March low, we've seen a rise of about 42% for the Australian share market, and even more for the US market, which is up by about 52%. A lot of traders talking about that September effect, where traders come back in the northern hemisphere from their holidays and reevaluate their positions, their portfolios, and how they're going to actually trade the markets. And coming back, looking at a 52% rise in a major index would be quite sobering, because most traders know that in the long term that's not sustainable. And if we do see a bit of a pullback, it would be the pause that refreshes to let the market run its natural course, hopefully higher rather than lower. Now, September is seen as a bit of a dangerous month, September and October. It was last year around this time that we saw the Lehman Brothers debacle, which saw the markets absolutely plummet on the back of that. In 2002 as well, if we have a look at that September-October period, that was when the market reached its low because of the recession in that year. Of course, we had September 11 in 2001, and that saw the markets tank as well. Of course, that wasn't the fault of the markets, but in 1997 as well, we saw the markets reacting to the Asian market currency crisis. That was around the same period. And then 1987, we saw the October crash as well. So a lot of investors, traders, a little bit nervous about this September effect, but it does look like traders are coming back from the Northern Hemisphere holidays, reevaluating their positions, and the market has had a pretty good run up so far.
Well, guns did not have a good run up today, but then in fairness, there was a lot of selling action, so it was caught up in the maelstrom of all of that. Tell me about the outlook, though.
It was caught up in some of the selling action, but this is also the first time that investors and shareholders have had a chance to react to Gun's net profit result that they came out with on Monday. Now, they said that net profit was down by 5%, and that really missed expectations. And we saw revenue falling by 11%. The dividend was cut from 4 cents down to 2 cents. So a lot of disappointment there. But not only that, on top of that, Guns has done a highly discounted capital raising. So it does look like it's raised $115 million from its institutional shareholder base at a discounted price of 90 cents. They'll be looking at raising another 30 million, so a total of about 145 million. Of course, this is to facilitate their purchase of ITC, which is going to cost them about $100 million. They're going to use the extra funds because there's a difference of about 45 million there to pay off debt and hopefully for some more acquisitions as well. But this capital raising means that shareholdings will be diluted by 25%. We've seen companies come out and announce even driven more than that in the past. But I guess the difference is that the market is feeling a little bit more bearish at the moment. So because of the selling pressure, we're seeing Guns shares react quite dramatically. If we have a look at the 30-day chart for Guns, this is what it looks like today. We saw a plummet down. The shares down by almost 12%, coming back online, but still not doing too badly in comparison to the price that the new shares were issued at, which is that 90-cent mark. Today we saw the shares finishing at 97 cents, and that's just an error on the close there.
So even though they said volumes and wood chips should kind of improve later this calendar year, you kind of think that's been overlooked a bit?
Well, Guns is one of those companies that has been looking for a joint venture partner for a while there to develop its Tasmanian pulp mill assets. And I guess without that joint venture partner, it has been stalling a little bit. It's still saying that it's searching for a partner to develop those assets. But I guess the market's looking for some more concrete signs that they're able to develop their plans there. So even though we may have seen the cycle bottom out, the economic global cycle bottom out, I guess for Guns, there's still a few challenges and a few question marks hanging over the stock before investors are confident in getting back in again.
All right, Julia, with that analysis, we'll leave it there. Have a great evening. Always appreciated.
Thanks, Carson.
All right.